Good morning, Market Michael here. Now, okay, I'm sorry for not making any videos at all yesterday. I was extremely busy. I couldn't get around to it. So let's just kind of cover what happened yesterday. And again, this is going to be the only video I'm going to post today. Maybe I'll get one in later. I doubt it, but keep the hope in there, a little glimmer of hope. So pretty much what we had going on yet. You know what? Let's go ahead and just look at the. Actually, great idea at this point in time. I'm gonna pull up the comp on stock charts. So, guys, we had you know how candles work. For this bullish candle, the open was at the bottom of the candle and the close was at the top. So here we have we failed this 50-day moving average break, but we were going to have a horrible rough day. But all of a sudden, at the end of the day, we had like 100 point plus of buying, and this was due to uh, $20 billion worth of Apple buybacks going on. At the same time, Apple announces they are 23 billion of stock and 100 billion buyback is on the way. So that's pretty interesting. And we also have Wall Street's um, has less than estimates, but they're still selling more phones, although it is less than what's expected. So I think everything right now is going to be less than expected. Let's just get into markets, and then we'll go over the data. So right now we are looking at increases, but we do see slight decreases today. Unless Apple buys back all of their shares right now, I don't see this going anywhere. It to me it looks more like, look at this 4 minute on forward slash n 4 minute 4 hour. You know we're peaked out here for CCI, so this kind of indicates, look at here, peaked out. We're kind of curling over. It's kind of weak curling over, weak curling over. And again, you look at here, we had fairly decently strong gains here, but never enough to fully go ahead and switch that momentum to like double. Like, look here, this is 28, 26. What's this? 8. Nothing. And this was only 8. So that's a sign that the um that this market is acting really fishy here. Doesn't want to go both ways. Greg Manarino says it's uncertain. I mean, I didn't want to agree with that statement because if we can't go up, we can't go down. But what does that really mean? It's uncertain. The market it can't find direction, especially with all these buybacks diluting the actual real price of the price direction. So what's that mean? That means I think we're going to have a down day today. I think all this is coming to a conclusion right here. Look at this. We are just bouncing off the bottom and negative with the Dow Jones. So if the Dow Jones says anything, the Dow Jones is telling the truth, guys. Dow Jones is telling the truth. We didn't even break out on a 4 hour. Compare the two 4 hours here, guys. We did not even break out. The comp broke out, so we're already coming down as we speak. Uh, as we come down, rates are going up. So rates, the 10-year opened up higher, much higher, had a big gap up. Yesterday had a great day for selling. We have 29.89 as the high this morning. The dollar, we'll just go over markets right now. Update you guys. Dollar popped up above that 90, 91, 92 mark. Now, I kind of expect this to come back down. Um, we can get a move up. I'm not really sure if that's what it wants to do. We're going to just have to wait and see where the dollar is going to go. I think long term, though, this is not sustainable. Let's look at other charts. I'll kind of break things down for you. We have the CCI kind of fading away. RSI spiking out. I mean, this 4-hour chart, we didn't even hit overbought in a year. We've had a humongous sell-off. I think this rally is just it's pretty wild. So this could be just another stepping stone, or it could be a pullback. I mean, right now, look at this. This is indicating it's a pullback. So it popped above this 2092, and we're coming back down. I can't be for sure on that one, guys. I can't be for sure, but we've hit overbought. The CCI spiked out, and we're starting to decrease here. We got this transition candle coming in, and we know this is resistance. All that being said, we're just going to have to wait and see. I wouldn't put any bets on the dollar because it's pretty wild. Now let's pull up gold here. Gold, I told you guys it had support at 1310. And I also said that it would have support at 1300. Well, we did end up touching that 1300 level, which is wild. Didn't expect that. Didn't expect us to just drop that support there, but it looks like that it's okay. We're trading in a range. If forward momentum continues onward, we're likely to see gold continue this rally. It just needs to get support and hold it. I don't know if this is manipulation or if this is just where it's at. I know silver. I know silver is just in this range, and we shouldn't be afraid of being in a range because it's just stuck in that price zone until we get a solid move up or down, and I think it's both those precious metals are going to go up. Inflation's coming. When the Fed has to really stop this tightening and start to do easing, that's going to put a lot of inflationary pressures on this already hot economy. And what's more important, inflation or stock market? Stock market. I want to go ahead and look at the 10-year, 2-year. Let's see how it's doing. I've been expecting this to go down, so I'm not really sure what's going on with it. 0.46, that's gone down dramatically. It was at 0.54. We've had a tremendous decrease. So like I've been saying, I think we're going to hit 3.3 sooner, much sooner than later, guys. This is astonishing. The yield curve is inverting at an insane rate. I think this is just going to accelerate. It's only a matter of time. Now, this crash is going to happen steadfast. It's going to be so insane. Now, we've got a bunch of factors to think about. We've got the Fed. How are they going to handle this market crash? How is the Fed going to handle the economic crisis? How are central banks going to handle derivatives market meltdowns? Where's all this liquidity going to come from? So, how is the Fed going to rescue us this time? Now, we got to wait and see what this builds up to be. I would assume that the Fed is just going to bail out everyone again. Central banks bail out everyone again. Possibly those bail-ins, take money from our savings, essentially. And there's a couple other factors going on. Yeah, I really don't know. I don't know. Looks like the 10-year is riding up again. Just looks like it just failed to break out. It was about to hit new highs here. Oof, this could be going up. Yep. This yield could be going up again. See though, it has to break here. we'd have to go overbought again. Could just need a little bit of time to reset. Gold's dropping back down. Well at this underbought. Could bounce off VWAP 1307. 1303 is some support. 1302. This is it's not it's just very interesting what's going on with the gold right now. And I guess at this point we should get into economic data. So, in stuff I did not cover because I wanted to cover it. Look at that crash there. We're getting some support, but still, you know, the reason why the market's up is because of Apple. It's not because of anything else. It's not because the economy's strong. It's not because, it when the economy is weakening, it means consumers are buying less. If consumers are buying less, these companies are going to perform less, and the revenue is going to be less. So what they're getting now is a result of the illusion and the propaganda. You take that propaganda illusion away, and now the customer has no savings for a rainy day, and they're not prepared at all for what's about to come. What's about to come is going to be so violent and so devastating that it's going to make '08 look like child's play. '08 was child's play. The '01 bubble was a much more serious stock crash. '08 dropped from the 38% to zero. That's nothing. '08 dropped from, '01 dropped from 100% to zero. That's a humongous difference. Now, this this is going to be from fucking 161% either to 100% or back to zero or back to 38 or something. That's pretty astonishing, guys. That's absolutely crazy. The economic data continues to weaken here. We got the ISM index coming in with a less than expected number. Now, although, okay, new orders production growing, yeah, but slower, and at a sluggish rate. Suppliers delivers slowing at faster rate, backlogging growth. Raw materials invents growing. Customers invents too low. Prices increasing at a faster rate. Exports and imports growing. You see those invents are too low. That's also a reason for those higher prices. Backlogging. Backlogging growth. Supply deliveries slowing. Okay, I just want to cover some stuff briefly here. Here we go. Bum 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 bum. Registered 57%, a decrease of 2 percentage points from March reading of 59.3%. New orders index registered at zero point 0.7 percentage point from March reading at 61.2%, and the March reading was 61.9%. Production index registered 57.2% at a 3.8% percentage point decrease compared to the March reading of 61%. Employment index registered 52.4%, a decrease of 3.1% points for a March reading of 57.3. Supply delivery index registered 61.1% at a 0.5 percentage point increase from the March reading of 60%. Invents registered 52.9%, a decrease of 2.6%. Everything is declining. Price index registered 79.3%, a 1.2 percentage point increase from the March reading of 78.1, indicating higher raw materials prices for the 26th consecutive month. Committees from panel reflect continued business strength. Demand remains strong, with new orders index at 60 or above for 12 straight months, and the customers' invents index remaining low. The back orders index continued to expanding with its highest reading since '04. Backlog orders index. So I guess that's orders that are not yet in. Like the supply isn't in yet. When registered, 63%. Consumption described as production and employment continues to expand. Yeah, described as, that's not what it is. But it has been restrained by labor and skill shortages. Inputs expressed, yeah, I didn't really want to read this. Look at this. Imports, slower. Overall economy, slower. It's growing, but slower. Yeah, but the direction's slower. So look, we've been going up like this. What's it mean to do slower? Like this. So we're going like this. And how do you get down? You go like this. We're in the process of shifting down. I think the illusion and the propaganda is finally starting to wear off on these markets. I think you guys know that. For instance, this buyback is about twice the 50 billion capitalization of Tesla. Uh, they're just pumping this shit up, guys. It's as simple as that, and that's all it's been. How do they pump it up? With cheap money. Well, how did Apple get all this money? From taking it back overseas. Regardless of how they get it, whether it's the tax cuts, whether it's that, whether it's repatriation, whether it's who the fuck knows what it is, guys. But the point of the story is we're declining right now. Declining, 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 slower but growing. What's growing mean? It means it's above levels that are considered dangerous. That's what growing means, guys. That's what growing means. So get over it. Get over the fact that we're just above the lines that say we're okay. We're entering the point of danger. And if you don't see this, the fucking red sirens are flashing everywhere. That PMI index is only like 7 points away. It's only 7 points away from being not growing and declining. Do you understand what that means? If we had a 2 percentage point decline, that's how many months? 2, 4, 6. That's roughly 3 months. We have 3 months of growth left, guys, until we revert. If we're at this pace of 2%, that's nothing. That's nothing. I could totally see that happening. In addition to that yield curve inverting, going at 3%, 3% or less. That yield curve, 3% or less. 0.3%. Excuse me, 0.3%. Nothing. It's not even percent. It's 0.3. That's the yield curve difference. Okay. What else? Construction spending. We had negative 1.7 and we're expected 0.5. That's absolutely disgusting. Construction costs are going up. That's making it more difficult to build homes. That's also, it's just putting a bigger pressure on construction in general. Auto and truck sales both declined in April. Car sales from 4.1 million to 3.9, and trucks declined from 9.6 million to 9.2 million. And this is where that Ford comes in with saying they're going to cut the production. So all this is coming into place. Oh my God. NBA mortgage index drops negative 2.5% from negative 2%. Negative 0.2%. Jesus fucking Christ. That's ridiculous. And ADP employment change, we've went from 241. We were expected a decline, but we declined much more than we thought. So 204. I have ADP up right here. I was trying to get some in-depth information on this. We're still up. It just doesn't show us what's up year to date. We took a big loss in information, gained everywhere else. Let's look at some charts. Look at this. Franchise employment, we're down big time, 10,600. I'm all right looking at the full details. However, okay, labor market continues to maintain at a steady pace with a little sign of slowdown. However, as labor pool tightens, it will become increasingly difficult for employers to find skilled talent. Job gains in the high-skilled professions such in the business service industry accounted for more than half the jobs added to this month. Construction industry, which relies on skilled labor, continued 6 months trend of steady job gains. Despite rising trade tensions, more volatile financial markets, poor weather, business added robust more than 200,000 jobs a month. At this pace, unemployment will soon be in the threes, which is rarefied in the risky territory as the economy threatens to overheat. I mean, look, we're having steady declines. This is quite steady, and we're decreasing these declines substantially. Historical trend: change in total non-farm private payrolls employment. So we've gone down, but we have higher highs. Looks like we double bottomed, but it could still continue to go down. Change in non-farm private employment by sector industry. Information had a big loss. Financial activities, other services didn't really grow too much. Natural resource mining, manufacturing. We got the biggest gains in business, health, hospitality, leisure, and construction. Skilled labor. Company size. So we've seen a big gain in large, in that mid-sized and large size, super large size gains of employment, because they're the only ones who can afford to pay, whereas the smaller guys are having more trouble and they're not able to handle this, you know, this data. So I just want to come in real quick and type in the labor participation. Labor force from the current population, labor force participation rate. So from '08, guys, we've been steadily declining. We were at 66%. Now we're barely at 63. I would like to see a longer term chart. Let's look at the total. Okay, again, we're at the level of 1979. Sorry, 1970s, let's just say. We're literally at the labor participation rate is at, and we're on this downtrend. So let's just see, what are we at now? Yeah, we're just floating 62. Yeah, we're just floating at here. There's no really steady trend for the last couple of years. I guess that's an indication of that employment. It's not that the fact that the labor market's tight. I just think there's a lot of skilled workers and they are looking for jobs. That's a good thing, but not this labor participation rate is awful. Awful. We're at 60%. That's what it was in the 70s. That's when we had stagflation. That's not good. It's not good. The 80s, 90s were much better. And at that time, we were supposedly shrinking our balance sheets, or at least trying. Greenspan was trying to do that. We had Volcker. Volcker was, he wanted to really change things and help long term. So with all this being said, we got a 25-minute video, packed economics, packed market, packed stocks, packed all this good stuff. The data continues to come in worse. I still think that this does not look good at all. We're in for a decline. We have lower highs. Expect a drop here on /NQ to 6,500. Let's look at the comp. Unless Apple just go ahead and buys 100 billion worth of shares, it's not going to continue. And again, when you have spikes like this, it's not continuous. You can't get continuous growth like this just from 100-point spikes at the end of the day. Do you know how ridiculous that is? Well, we're at the end of the fucking line here, guys. End of the fucking line. I think we're going to hit that 7,000 point today. I don't know if we're going to sell off. If we sell off, we're going to hit that 6,600 level. We're definitely going to tag the 6,800 and fall through that 200-day moving average, guys. I know we will. We're not that far from it. We're not that far from it with the other indices. So, if anything, today we'll just reverse the gains of yesterday. Look how flat we are. This is a market where it's just shot. We were supposed to have a double dandy, but we can't even get that double dandy. We can't even move higher, guys. So if we can't move higher, if we can't breach this 50-day moving average, where are we going to go? Down. Where are we going to go down to? 7,000. Where are we going to go down after that? 6,900, and then where after that? 6,800, and then boom. That's a big move down. That's like, again, that's from here. That's from that 7,300 to that 6,900 level. So I think with all this being said, I'm going to have to let you guys go. I'm going to put all these statistics, all this information up on the YouTube description so you guys can go ahead and take a look at that. Just examine everything that I said. Listen carefully. Please like and subscribe. I'm sorry I didn't get any videos out yesterday. I told you I would. I had to get a video out this morning. Possibly I can get one out later. I'm not really too sure. Later as in like 5, 6 o'clock, but I really don't know. I really don't know. We're going to have to just wait and see. So thank you very much, guys. Please like and subscribe. Take care.